Alrighty, happy Monday. Today I'm going to be giving you guys a quick swing trading recap. So our first swing trade exit of the day was Nike. And on Nike, we were saying that on the daily chart, we're looking for an all-time high breakout pattern. And that's exactly what happened. And I said maybe Nike runs up to 112 right in the morning. And Nike sure did. And so we just started to exit one of our calls in the morning at about 111.50. So we had this nice push up in the morning, nice, good, solid triangle pattern. Then we broke bullish. I was thinking about adding over 111, but we were a little bit extended, and right now the SPY is still super choppy, so you never know if you might just get this pull down can get into a bigger pull down. But Nike started to really push up, and then once you get a huge pop and IV inflation, it's usually good to take off the contract, because even though I took it off at 11.50, I could have taken it off at 112 maybe for an extra $20 or $30, but you have to ride through a lot more volatility to get that. So Nike was a great revenue trade to start the day, and that was about almost $100. And so we also sold our debit spread once we hit the 112, and then we turned $25 into $80. So that was the first trade of the day, Nike. Our next trade of the day was a NEO, and we just took some profits on NEO. We took some shares off just in front of 14.98. If we want to show trades, it can get a bit messy because I like to wiggle in and out of my trades. But NEO, we were talking about how we'd like to go long over 14.50. I already had a small swing trade position, so I was just starting to take some profits in front of that 14.98. Then I put in a break-even stop, and that held just by 5 pennies. Thank goodness. So now I'm trailing NEO a little bit looser. Actually, I might drag this up just underneath this breakout point right about there. So 14.64 is my new stop on NEO. So NEO, watch out for the all-time high break. If we can close hourly, probably above 15, that might open up the door for NEO to pop those all-time highs. I know the shares can get pretty messy. Our next trade of the day was Shll, and this is our half day trade, half swing trade. And Shll is going really well, as you can see. We started averaging in once we started to see this ascending triangle happen, and it started to break out. And we're already up super big on the day, so I was like, oh, I'll be a little bit conservative, and I took my profits right here at about 35.83 on this pull down. And then, of course, obviously, in hindsight's 2020, I probably should have held, but I still have 10 shares riding, and you can see the P&L open and then the P&L on the day. So I've closed something about $35 of profit, but we still have $40 that's unrealized as Shll breaks out to all-time highs. So keep an eye out for that. It is a bit extended, so do not be surprised if we gap down tomorrow, but that's why I'm only risking 10 shares. So Shll, very volatile, wide spreads. Not super wide if you're just doing shares, but for options, not really a favorite of mine. For options, the spreads are just, we check the bid-ask spreads. Shll, yeah, I mean, 830 by 860, $30 wide. You could end up losing $30 just getting into the trade, not to mention them being extremely expensive. And if you were to buy a debit spread, you're going to catch that slippage both on the $30 and on the call you're longing, and then also $30 on the call you're shorting. So you could end up losing at most $60 just buying a debit spread. So Shll, keep an eye out for that. Shares riding really well. Our next trade of the day was Disney. And Disney was actually not in the game plan, but we saw this huge push up. And so we started buying some shares, but let's take the show trades off real quick. And what we did was we actually did a ghetto spread. So what we did was over 130, I bought a two weeks out 35 strike call. And then as we pushed up, right at about 130.80, I sold the 138 call. What this did, if we go to Robinhood, was that, so we bought the 135 call for $85. But instead of just selling it when it was worth, $104, I could have taken, a $20 profit. Instead of doing that, I instead sold the 138 call. And what this did was this gave me, if it can load up, this gave me $51 straight up into my account, but I can only do this if I own the 135 call. So now my max risk, instead of $87, my max risk is only about $30. So risking $30 to make $300 on Disney, kind of like a free trade. So half day trade, half swing trade going on there. So keep an eye out for Disney. It should have a continuation hourly above 130, and it is good to go. Watch to see if it can break 132 and other levels like that. And then our last few trades of the day was I had a VIX call swing trade that was just as a hedge, so I could push some of the long trades. But in case we had a big drop, I was ready to cash that out, but we had to cut our losses on that, so we took a $35 hit on the VIX call. And then lastly, we are still holding Microsoft, a Microsoft call, which isn't doing too well, but the Vega, the change in implied volatility is leveling out a bit, and so that's why I figure it's the better risk to reward to hold it. So we just need Microsoft at about above 217.5. So basically all-time high breakout is what I'm going for by the end of the week. And if not, if we gap down, I'll probably cut it if we get below 212.42 on Microsoft. So keep an eye out for Microsoft. If it can break those all-time highs we talked about in the game plan, 220, 223, 225. So hopefully you learned something new. Hit the like if you did. See ya.